So the Roseville, California housing market is heating up going into the spring season, and it's not showing any signs of cooling down. So in today's video, we're going to dig into some of those stats and facts so you know exactly what is going on in today's market. All right, so up on the screen, I have the data here for all single family homes that are either for sale, sold, or pending in Roseville, California. Now, the light green bar here is an indication of how many units were for sale. We had 88 units in March, we had 194 units sold, and we had 232 housing units put under contract. Now, what's interesting here is you saw this massive spike in homes put under contract, and you saw a relatively large jump in actual sales activity or homes that are being sold. But if you go back a year, we're looking at about a 46% increase in the number of homes for sale compared to 1 year ago. The number of actual homes sold is down about 1.5%, and then the number of homes pended or put under contract, meaning a seller has agreed to sell and a buyer has agreed to purchase, is actually up about 3.6%. So sales activity is really strong here going into the spring. All right, the next chart on the screen here is the average price per square foot. This is actually really interesting to me. So the average price per square foot for last month was at $338, which is actually down slightly from the month prior. But if you go back 1 year, we're actually up 19.4%. So this is actually one of my favorite metrics to monitor because I actually think it's a really good way to find value in a marketplace. So if you know the average price per square foot in that market is, let's say, $338 per square foot, but you can find a property that maybe has a little extra square footage, or you can convert something to make it a little bit more functional, and you can purchase that home for, let's say, $300 a square foot, then you know you have sort of a built-in value if you can make the space more functional. All right, next up on the screen is the average days on market. You can see that we are sitting at about 12 days on market. So that is less than 2 weeks. It is very hot. Not a major surprise here. It's a seller's market. There's not a ton of inventory. And then of course, we're starting to see homes that are selling well over the initial listing price. So this green line here is actually an indication of what the property is listed for compared to what it actually sold for. So last month, homes sold on average for about 3% more than what they were actually listed for. Now, if you go back a month or two, you can see that homes were just selling for right about what the properties were actually listed for. And if you go back even further than that, you can see that in June of 2021, homes sold on average for about 6% over what that home was listed for. Now you might be thinking, wow, that sold for quite a bit above the actual asking price, and you would be absolutely correct. So, we're starting to see multiple offers on many of these properties. We're seeing very competitive terms, and then we're also starting to see if the property is priced correctly, we're starting to see a lot of people bid over trying to get that winning bid and get under contract in that property. All right, and then the last chart that I want to review with you here is the month's worth of inventory. And very basic, the way this works is that if no other homes hit the open market, it will take however many months to sell all of the existing inventory that is there. Now, we're sitting at about a half month's worth of inventory, which means if nothing hits the open market, it's only going to take about 2 weeks to sell everything that is currently listed. That is not very much inventory, so there's just a major lack of supply here. And then you can see that the inventory peaked out in the last 12 months at about 0.8 months worth of inventory, so still under a month's worth of supply even at its peak. So this is not what we would consider a very balanced market. Very low levels of inventory. We still have a bunch of built up buyer demand, and then now we got to kind of throw into the mix that interest rates are rising, so it's decreasing affordability, which is making it a little bit more challenging because that rise in interest rates, we're sitting at about, let's see, right around 5% on average. That's up about 2% from the beginning of the year alone, which is decreasing purchasing power on average by about 20%. So anyway, very competitive market, but now you kind of have the stats and the facts if you're looking to make a decision, whether you're a buyer or a seller in this market. Anyway, I hope you found this information useful. That's what's going on in Roseville. If you have any comments, please leave them below. Would love to hear from you. And if you haven't done so already, please consider liking, subscribing, and we'll see you on the next video. Take care.